money get paper. But you know we party hard later. Mr. Flex and Papa got the old city lock with the girls in each and every area. Stepping NFC with no chaser.
Good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am Alluminati, and this is the Crypto and Cognac podcast show, as always, powered by our friends at Alti.com, the one-click crypto wallet for Telegram, WhatsApp, and Discord. And as always, fueled by my friends at Hennessy TT. Tonight we're having some VSOP. And guys, we're gonna run it through. We are halfway through 2022. So we're gonna take a look back and see what kind of damage has been done. Look at, a few things that we can hope to be optimistic about. And in general, we're gonna, just discuss what has happened over the last 6 months, January to June. And we're gonna talk it up, right? I want you guys to participate. We're gonna have this conversation as me and you guys. Steven, what's up? Just call me L. For sure, it's been a long 6 months. It's been a long week. But we're gonna get through it with the help of my good friends here. I want to just remind you guys that nothing that we share here on the podcast should be misconstrued as being financial advice. It is entirely for information, conversation, and education. Right? So, how do we start this thing? I think it's important for us to start with a little bit of context, right? So, the first thing is crypto and the crypto market have not been the only thing that has been affected by the occurrences of 2022, right? Almost all capital markets are down. For example, gold down a little bit, right? The S&P, however, is down 21%, which is the steepest half-year decline in the last 50 years. The NASDAQ is over 30%, is down over 30%. And of course, Bitcoin is down about 57% from its high of $48,000 on January 1st to somewhere around 20,600, I think was the last figure I saw a few moments ago, right? So everybody is being affected. But as we talk about context, as we talk about what is transpiring in the markets, as we talk about crypto and Bitcoin, as it compares to all the other capital markets, I want to just reference Bitcoin's performance over the last decade compared to some of these other markets, right? So for example, gold is up 17% over the last 10 years. The stock market, the S&P particularly, has been averaging just under 15% returns year on year. So about 150% for the period, the last 10 years. But what does this mean, right? As we always say, when in doubt, zoom out. $100. Oh, I didn't tell you all. Bitcoin is up over 60,000% over the last decade, right? So what we're going to take a look at is the fact that $100 invested in the stock market, invested in gold, invested in Bitcoin 10 years ago, what would that look like now? So if you had invested $100 in gold in July 2012, you will now have about $117. Not bad, 17% increase. If you had invested in the stock market, you would have seen a return of 150%. So that investment would now look like $250, which is nothing to sneeze at. However, if you had invested $100 in Bitcoin back in 2012, you would be looking at gains upwards of $60,000. So, as we look back at the last 6 months, as we look back at what we can now confirm as being the bear market, even, or I should say, despite it being the bear market, Bitcoin continues to be the single best performing asset class in the world, right? It continues to outperform every other asset class in the world, from gold, stock market, bonds, real estate. Bitcoin continues to outperform them all. So when in doubt, zoom out, take a look at, maybe extend your time horizon for your investments. And like Steven says, maybe DCA over the time so that you are not exposed to any single point of volatility. So we're going to start January. Like I said, in January 1, 2022, Bitcoin started the year just under $48,000. 47.7, I think, on some exchanges. What came next was a bit of a shocker, because Bitcoin closed January month around $38,000. And what happened in between there was we had multiple crypto ETFs being filed. We had the Fed releasing a report on potential US CBDC. We had the GMI PAC launched, which is a pro-crypto lobbying group in the US. We had global regulatory environment tightening around crypto. We saw more and more governments taking a stronger stance or a stronger look into the crypto market, which would have created some fear, some instability, and that was reflected ultimately in the price action. We also saw that NFT searches surpassed that of crypto searches for the first time, right? The Fed in January also started warning about quantitative tightening to deal with what had become runaway inflation. Yeah, Canada is definitely leading North America and the West in terms of their ETFs, also holding, I think, one of the only spot ETFs in the West. So that was January. Ended the month at 38K. February came, and we had hoped for some recovery. But after we started the month of February at 38K, Russia decided that they didn't like the situation on their doorsteps and chose to invade their neighbors, Ukraine. Now that caused some major anxiety across the world in capital markets, and that affected the price significantly. However, what we saw happen subsequently was that crypto, Bitcoin particularly, was seen as being somewhat of a life raft for persons on both sides of the fence who were affected by the fallout from this conflict. So we saw Ukrainians being able to receive support via crypto. We also saw Russians who were affected by sanctions being able to receive support via crypto. Again, as we always say, crypto does not choose. It does not choose politics. It does not choose ethics. Crypto just chooses its rules, and anybody can participate as long as they follow those rules. Open source, permissionless blockchain. Yeah. We saw inflation fears continue to grow, but we also saw some significant institutional interest growing in the crypto market during February. And that actually resulted, those combination of things, crypto being championed as a life raft for those experiencing challenges due to that conflict, as well as greater institutional interest. That led to somewhat of a recovery in price during February. So we saw Bitcoin move from February 1st price of 38K and ended the month at just over 43K. So we started moving back in a positive direction. People got excited again. And then in March, we saw a few things happen. The long awaited, we saw some talk about a presidential order or executive order to be signed by President Biden. When insiders got their hands on that executive order, it was a lot more bullish than people had initially anticipated. And we saw that really help strengthen the positive sentiments that we would have seen building at the end of February, right? That presidential order, that executive order was concerning digital assets on a whole and how they should be addressed, which bodies, which governmental bodies should be responsible for managing the affairs of regulating digital assets on a whole. In March as well, we saw a lower than expected Fed rate hike of 0.25% instead of the expected 0.5%. So that was received very positively. And again, I think with the regulatory clarity that was provided via that executive order that President Biden signed, we saw a general, more positive outlook in the markets to the potential to come in the blockchain space with Bitcoin. And we continue to inch our way back to what seemed at the time as some recovery. So we started the month of March at 44K, and we would have closed the month at 45K. By the time April 1st rolled around, we were closing that day on 46K. And things were looking up. Things were looking up for the crypto space. We had Coinbase NFT platform go live. We saw NFT markets continue to grow. Miami NFT week was that week. You know, you guys got to see some behind the scenes of that. And one very, very interesting thing that we saw happen in April was that the Luna Foundation Guard had started accumulating Bitcoin at a very, very high rate. And this was very, very promising, a very, very promising occurrence to most people. Also in April, we saw Elon Musk start his journey towards the purchase of Twitter for a reported $44 billion. If you're following the news, you would know that he is no longer so interested. He's actually interested in pulling out his his interest or his bid. And then May came. And then May came. And what we saw was what people have called a black swan event. But it really pulled the rug out of all the positive momentum that was being built or rebuilt in the crypto space when Terra Luna and its associated stablecoin UST collapsed. And I'm not going to go too much into the reasons for that collapse because that is something that has been addressed ad nauseum by people with way more time than I have. What I could do, I could add some links in the description below for those to go after could go and check out some of the details around that. But that really took the wind out of the sails. Duquan did us in, and it feels like since then, crypto and the crypto markets haven't been struggling to recover because a lot of organizations, a lot of institutional investors, institutional players had significant exposure to Luna and to UST. And we would have started May at around 38,000. And by the end of May, we were down, holding on for dear life to 31K. June came, we started June at 30K, and the blows just kept coming, right? So we had the Federal Reserve rate hike increase by 0.75%, the largest single rate hike since 1994. And that actually was the third rate hike for the year as they continued to try to battle with the rising inflation costs. In June, we saw some very big name centralized players in the crypto space stumble. We saw Celsius fall and file for Chapter 11 bankruptcy. We saw 3AC, 3 Arrows Capital, file for Chapter 15 bankruptcy. We saw Voyager file for Chapter 11 bankruptcy. We saw Vold and Babel, for example, freeze withdrawals of customers. And in general, we saw a lot of turmoil in the crypto space. We did see FTX, Sam and his team step in to offer some aid and to provide some bailouts for some of these organizations. We saw them inject capital to BlockFi, I think via a loan. We saw them inject capital for Voyager as well. We also saw some other players like I think Nexo started looking at or having acquisition talks around purchasing Vold. So we are seeing a bit of, I guess, consolidation within the CeFi space. And we will, I guess only time can tell what that ultimately looks like, what the results of that ultimately is. Just call me Alice saying the unstable the unstable quant situation was necessary for two reasons. One, to show how deeply involved the market's large corporations are, and two, to show how little they actually understood about the space. I agree. I don't think that they didn't understand the space, you know. I just think, like most people from retail all the way up, they overextended themselves. You know, the market has become significantly over leveraged. People trying to use 5x and 10x and 20x and 50x leverage to become millionaires overnight. A lot of these companies were providing huge amounts of yield um, as a means of drawing new customers into their fold. And as the market started performing, I mean, that's all well and good in a bull market where, you know, we see in, you know, 10%, 15%, 10x's, 50x's, week on week, month on month. But when the market starts to contract, it's a lot less sustainable to pay those types of yield. And I think ultimately the bottom kind of fell out of that 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 strategy, if you understand what I'm trying to say, right? Yes, even Three Arrows also filed for bankruptcy. So we have seen a lot of different things happen in 6 months. And, you know, we always say that a day in crypto or a week in crypto is like a year in regular time. So it definitely has shone a light on the continued instability associated with the market. It has shown that we are still very, very much a nascent market. We are still very much a small industry. Small amounts of capital are able to influence major movements in the market. As of right now, the market cap of the entire crypto industry is under $1 trillion. So we've seen, you know, we've seen ourselves lose 2 trillion worth of market cap in just a matter of months. And I think it's all good so that everybody can kind of take stock of themselves. And for those who really, really have the conviction to really batten down the hatches and be able to continue to execute and see the benefits of this opportunity over the long term. Yeah. Let me see what Just Cause said. They overestimated the stability of the tech. Most crypto vets could have told you ahead of time to not put all that capital in a single investment. Well, what I would say is they haven't overestimated the stability of the tech, because the tech works, right? The fact of the matter is that Bitcoin, let's talk Bitcoin here. Bitcoin's tech has never failed. You know, Bitcoin continues to do what it was meant to do, and that is to deliver a new block every 10 minutes or so, and it's done so for its lifetime. So the tech is very strong. I think what they overestimated was their ability to manipulate that tech and to ultimately continue to benefit from that manipulation. So they live and they learn, you know, and we learn from them. A lot of people were hurt, unfortunately, in the collapse of Terra Luna. A lot of people lost large sums of investment. Some people got out, you know, with something. Some people didn't fare so well, and it affected everything around it. It was very, very cancerous. So unfortunately, that's the situation. But like I said, for context, when in doubt, zoom out. Because the fact of the matter is, Bitcoin today, despite a war in Europe, despite global financial challenges, despite global shipping and distribution challenges, despite Federal Reserve rate hikes, despite black swan events like Terra Luna crashing, Bitcoin is up 60,000% over the last 10 years. So I don't know about you guys, but that gives me a lot of confidence to make decisions at this particular time with 10 years in mind. You know, I'm not expecting 60,000%, but what I am expecting and hoping for, and not, this is not financial advice, this is my personal view, and this is what I will be doing, is that I expect that Bitcoin is gonna continue to outperform every other asset class for the next 10 years. So I'm in it for the long haul. For those of you who know me, who are part of my community, you guys know that I have no intentions of selling any Bitcoin. Bitcoin is not for me. Bitcoin is for my kids, for my grandkids, my child, my grandkids, only one. So yeah, I mean, I have long-term beliefs in Bitcoin. Stephen is saying, now are the best entry prices, entry points, and what we've learned historically is that the bear market is when wealth is created. You know, unfortunately, some people aren't convicted enough to stick around through it, but it's the decisions that are made during the bear market that really bear fruit in the bull market. So I advise you guys to do your research, look at projects that you are excited about, projects that you expect to be around for a long time. And if you're convicted, you know, pick them up at discounts. Some projects will survive, some wouldn't. I would tell you personally, I was very, very bullish about Celsius. Celsius was one of the projects that I really, really thought was going to have a major impact on adoption in the space. And I was accumulating sell tokens with that expectation. And, you know, I could not foresee that this would have happened. So again, do your research, but don't overextend yourself, don't over leverage yourself, don't bet the farm, don't bet your rent money, because at the end of the day, none of us have a crystal ball. So anything is possible in this space, and especially because we are very, very early. You know, it doesn't feel like that, but that is the fact. We are the early Westerners heading west, laying train tracks, digging for oil, looking for gold, and that's gonna come with some challenges, you know, and we have to be aware of those challenges and be, you know, brave enough to and honest enough with ourselves to make the appropriate decisions for ourselves and our families and our futures, as it relates to those things. Let me just check to see. Yeah, I mean, don't overexpose yourself, don't overexpose your portfolio. Now is not the time to be gambling. Now is not the time to just be throwing money at tokens because somebody told you about it. Do your own research. It's more important now than it's ever been before, right? So guys, I just wanted to take the time out today to just run through a quick recap of what we've seen happen so far for the year, something easy, digestible for the average person. What I would say is don't be scared, don't be afraid of the volatility that we are seeing in this space. It's all par for the course. Go back, do your history reading, look at what happened in the previous bear cycles, look at the type of projects that survived it. What are the characteristics of those types of projects? And then you can use that information to inform you on, you know, who may survive this current bear market. Yeah. Yeah, I mean, I was joking the other day that just call me Ellis saying that facts, the most experienced crypto expert is just an educated guesser in terms of pricing. Best bet is to do your own research and focus on the tech, not the prices for your investment. So I was making the joke that, it seems like crypto analysts and basketball analysts have something in common. They make educated predictions, but at the end of the day, most people don't have a clue of what is going to happen, and they could only reference the experience at the time. We are all reacting to new information. Um, if you look back in October, most people would say Bitcoin was going to 100K, and most people didn't have a clue that the Golden State Warriors would win the NBA championships for 2022, right? We are very far from 100K. Doubtful that we're gonna hit it this year. And we know that Golden State raised another banner this year. So guys, at the end of the day, all you can do is do your own research. Again, do not overexpose yourself. Do not invest more than you are willing to lose or able to lose, both financially and emotionally, right? Because sometimes financially you're still in a positive position, but that emotional loss of moving from $69,000 Bitcoin to 20,000 Bitcoin is a hard pill to swallow. You understand? Even though your average purchase price might be $15,000 Bitcoin and you're still in profits, that's a hard pill to swallow. So don't overextend yourself by any means. Stay true to you. Stay true to your goals. Stay true to your investment horizons. Stay true to your risk appetite, and stay committed. Huddle on, guys. Yeah, this is a quick one tonight, quick and dirty. I want to thank Stephen. I want to thank Just Call Me L. I want to thank everybody for joining me today, just to go through a quick recap of 2022 thus far. Let's see what the next 6 months have in store for us. What kind of conversations are we going to be having December 2022? Yeah, for sure. If all your crypto holdings going to zero would drastically change your life, you're definitely overextended. Or maybe you're just all in like me. Guys, thank you very much for joining with me this evening. I personally believe, as I say, always adoption is inevitable. Alluminati out. Bless.